G'day everyone, welcome to the weekend general update for the 9th and 10th of February. And markets just continue to power on. We saw another outstanding week in the Australian market, and the US market broke out on Friday night. So whilst it's starting to defy a little bit of logic in terms of how far and how progressively this market continues to rise, the fact is there's an enormous amount of momentum behind it. And it would be a very brave person that would try and call the end to this rally or try and attack it from the short side. So just a reminder, general advice only in this particular video. So let's look at a summary. Now the S&P only gained 5 points on the week, but the early part of the week was really about consolidation of the recent rise, and we saw a really nice breakout on Friday night, which may or may not continue because the S&P index is really quite close to some important resistance, as we'll see. But the breakout came pretty quickly. We only had to wait a handful of days while there was a bit of sideways consolidation, and it was off again. Now, what's going on around the world in most global markets is this is not about historical valuations. Now, a lot of people are pointing to the value of our banks and the value of lots of our companies and saying that they're fully priced, and that's true. They are on a comparative valuation measure. But stocks are being pushed up to such an extent now because it's a comparison between yield. If you can buy a stock that's paying 5 or 6% dividend as opposed to getting 3% on government bonds or maybe 4% cash in the bank, then it still looks attractive. And I think there's every chance that stock prices could continue to be pushed up until the gap between government bonds and cash and what is available through reliable dividend payers perhaps closes up a little bit more. It's starting to get pretty narrow now. If you think back 6 or 8 months, you could have got 10% yield on Telstra. That yield now is down to 6%. So the gap between the yield on Telstra and our banks has narrowed significantly compared to the cash rate. But nevertheless, that's what's happening in America as well, and markets can continue in a certain direction for longer than anyone envisaged. So it's possible this could continue for a bit longer yet. Now in Australia, our market gained 50 points. We had another strong week, and basically our index is up 630 points since mid-November. Now I know that's just a reflection of the banks and Telstra and BHP and Rio, but that's an enormous gain. Now reporting season is just starting in Australia, and that's going to be critical to some individual stocks because a lot of prices have been pushed up quite significantly, and any disappointment at all, even if the results on the surface appear to be pretty good, can be harshly treated. And we saw that through the week with Cochlear, which came out with what appeared to be a pretty good profit report, but it was obviously less than what the market has expected, and the price has been sold down from around $83 down to under $70. Quite a dramatic fall. So companies are going to need to come out with some pretty stunning results to justify some of the price rises that have come in the last month or two. Now the US dollar rose on the week. The big picture trend of course is down, but on this week it rose, and that was largely because of comments from the ECB regarding the fact that they didn't want the euro to get any stronger, and they wanted to get the euro down, and so a lot of currency traders have hopped in and tried to front run the ECB and forced the euro down and the US dollar up. So we've still got this massive currency devaluation war. We've got America, Japan, China, Europe, UK. Everyone wants a weaker currency to improve their export market competitiveness. But because currencies are relative, they can't all have that, of course, and so some are going to win and some are not going to win. But the one winner in all this will be gold. Over the longer term, gold just has to do much better than paper currencies out of this devaluation war that's going on. Now gold was unchanged on the week, so we're still stuck in this trading range. It's a little bit frustrating. It will resolve itself almost certainly to the upside, and we've just got to wait and be patient until that happens, because the fundamentals are still not only compelling, but they're just getting better and better. And we've now got Japan joining in with massive money printing and devaluation of their currency. This has to all play out into a higher gold price in time. Gold stock indices looking slightly better. Still haven't really made a move yet, but they certainly look poised as though they've formed a base, phase one base, and could move into an uptrend. Copper, if you want an indication of what's going on in the global economy, copper still holding steady around $3.74. People were predicting copper would come off as some destocking took place. People have been predicting that for copper for 12 months, and it just doesn't happen. And oil slipped to 96, down a couple of dollars, but not a lot of movement in oil. And there's the 6-month spot copper chart, and you can see since the middle of November that the price of copper has been basically rising, and it's almost back to medium-term highs. So let's go and have a look at some charts. The first one here is the S&P 500, and we'll pan back and take a big picture look. So the all-time highs, as you can see, formed in 2007 at around about 1570, and then we've also got a lesser level. It's a more minor resistance level, but it may come into play, and we're basically at that level right now, give or take just a couple of points. But you can see it's been an incredibly strong uptrend. Let's just put a trend line on this. So very, very strong uptrend. We're almost to that resistance level now. Whether that impacts the market or it just keeps going remains to be seen. But certainly it's looking very, very strong indeed. Now, if we have a look at our market, you can see also we've got a key level here at 49.70, which is basically somewhere between 49.70 and 5,000, which is basically where we are now. Now you can see on the RSI just how overbought our market is. Our market, the RSI, has been above 70 now since about the middle of December. Less than halfway up this rise, so it's been overbought for a long period of time, much more than would normally be the case. We will get a correction, but it's just a matter of from what level and when that occurs. A 5% correction would just be such a good thing for our market. So we'll just see how it unfolds, but equally the momentum incredibly strong. And there's no reason why our market can't continue to push higher. Now let's have a look at gold. Look at it on the weekly chart, and you can see now we've had 1, 2, 3, 4, 5, 6, 7, 8 weeks now, basically in a very tight range. There is quite a big picture triangle that's forming since we got the highs in September of 2011. So we're now looking at about 17 months we've had this correction. It was 34 months to the upside, and now 17 months in consolidation, which really is not that much out of the question when you think about it. So we went from 700 to 1900 over 34 months. We've now gone 17 months in a triangle. I don't think it's going to take too much longer, and we'll see a breakout. It's remotely possible the breakout could be to the downside. We could get a false break before the market moves higher. But based on the fundamentals, it's inconceivable to me that the breakout won't be to the upside, but based on fundamentals. But as we know, this is a market which is heavily manipulated by vested interests. and you just never know what is possible. Now silver also forming a big picture and small picture triangle consolidation period. So we've got this triangle forming up through here. So I think silver is also poised to break to the upside, and we could see $34.50-ish to $35 achieved pretty quickly, because when silver does start to move, it does move quite quickly. So look for that breakout in perhaps in the next couple of trading sessions. Okay, so that's it for this week. I think we're in a position where it's a bit difficult, other than a few specific stock examples, to really get stuck into this market heavily. It really needs a pullback, but I think if we did get a 5% correction or so in our market, it would be a very good point to be attacking the market from the long side again. So that's it for this week. Cheers.